Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 21,750 points level. Since then, we did see a very strong recovery on the Dow Jones as it climbed back above all the moving average lines above the 25,000 psychological level as well, forming the short-term breakout, pullback, and the continuation pattern was established as the Dow continues to march higher. On overnight, we are seeing another 0.03 percent gains on the Dow Jones, lifted by the stronger than expected corporate earnings from Walmart. For now, let's monitor for the next breakout above the 26,000 psychological level. Should that level breach, we might be seeing further upside towards the 26,500 or even back towards the previous all-time high of the 27,000 psychological level. In the meantime, the 25,000 will serve as the immediate support level for now. All in all, the uptrend in Dow Industrial formation was being established on the Dow Jones as the Dow has been forming the higher high and also the higher low formation over the past 1.5 months trading period. Similarly, on the S&P 500, we are seeing the S&P 500 has earlier recovered from the recent low of 2350 level. Since then, the S&P 500 continues to march higher above all its moving average lines, forming the breakout, pullback, and the continuation pattern above the EMA 120, which is around the 2680. For now, we might be seeing the S&P 500 to head towards the 2800 psychological level. That will be the next resistance for now. Should that level were to be breached, further upside will be seen towards the 2850 or even towards the previous all-time high of 2940 level on the S&P 500. In the meantime, the 2680 will serve as the immediate support level for now. With our list on the core prices continues to recover after forming the recovery on top of the 4250. Since then, we are seeing the consolidation band between the 51 towards the 55 US dollars per mark. And on yesterday, we are seeing the breakout above the 55, and the follow-through buy interest was noted as well. With the sharp gains on the core prices as of late, we might be seeing further upside or further recovery on the core prices to head back towards the 60 or even towards the 63 US dollars per mark. The recovery on over the past couple of days was mainly stemmed by the optimism of the US and potential US and China trade deal, which could boost the global demand on the energy. On the downside wise, the 50 will serve as the immediate support level for now. Some of it's on our local front. The FMKLCI has again been hovering between the 1665 towards the 1700 psychological level. After retesting the 1700 level on several occasions, we did not see any follow-through by interest, and instead, the FMKLCI has once again pulled back towards its consolidation band. But on yesterday, we are seeing another breakout above the 1700 psychological level as well on the FMKLCI. On the key index right now, let's monitor to see if there's any follow-through by interest beyond the 1700. Should there be a follow-through by interest over the next couple of days, we might be seeing the FMKLCI to head back towards the 1740 level. That will be the immediate resistance for now. In the meantime, the 1680 will serve as the immediate support level on the FMKLCI. With the breakout above the 1700 psychological level on yesterday, we are already seeing the MACD indicator has already issued a buy signal, whereas the RSI has also risen above the 50 level as well, implying that this could be mark another wave of up recovery on the FMKLCI towards the 1740. On stocks on the low liners wise, we are seeing the FM's market index continues to march higher following the breakout above the 12,300 points level. It continues to inch higher towards the EMA 120, which is around the 12,830 points level. That will be the reasons for now. Should there be a follow-through by interest beyond that, we might be seeing the FM's market index to see a continuous rotational play towards the next resistance, which is located towards the 13,600 points level. In the meantime, the 12,270 points will serve as the immediate support level for now. Despite the overbought position, we might be seeing a continuous buying interest among the lowliners after a long downturn over the past year. On stocks wise, some of the stocks that become commercial for firstly will be JHM. JHM has earlier rallied towards the 1 ringgit and 45 cents level. Since then, we are seeing a sharp pullback on the JHM towards the 80.5 cents level. After hitting the 80.5 cents level, forming the double bottom of formation along that, we are seeing the JHM has formed the recovery above the. Firstly, it managed to break out above the 94 cents level, and secondly, we did see the JHM continues to trend higher above the EMA 120 as well. On yesterday, we are seeing again another short-term consolidation breakout above the 1 ringgit and 8 cents level, accompanied by some of the improvement in volumes being traded. With the breakout above the 1 ringgit and 8 cents, we could expect JHM to see a further buying interest to head back towards the 120 or even towards the 128 level. Stop loss will be located below the 1 ringgit psychological level on JHM. On Tongwan, price has recovered towards the 3 ringgit and 8 cents level. Since then, we are seeing price has dashed a sharp pullback towards the 2 ringgit and 7 cents level before staging a recovery. But the recovery during this period it could not last long, as the Tongwan has once again rejected the EMA 120 level on several occasions. But on yesterday, we are seeing a gap up formation on Tongwan, accompanied by some of the high volumes being traded as price closed above the EMA 20 level. On Tongwan right now, let's monitor for this trend line breakout, which is above yesterday's high of the 2 ringgit and 38 cents level. Should price breach above the 2 ringgit and 39 cents level, we could expect our Tongwan to head back towards the 260 or even towards the 272. Stop loss will be located below the 2 ringgit and 28 cents level on our Tongwan. Should price manage to break out above this trend line of 2 ringgit and 38 cents level, we could expect the MACD indicator to issue the buy signal, whereas the RSI could be rising back above the 50 level as well, should the trend line level were to be breached. On Sunway Construction, price has again retraced, forming the double bottom formation along the 1 ringgit and 30 cents level. It managed to recover along the 1 ringgit and 30 cents level in the early October last year, and once again during mid of December last year. Since then, we did see Sunway Construction has managed to form the consolidation breakout above the 1 ringgit and 60 cents level on yesterday, after the company has announced that they have backed a contract from the Tenaga Nasional Berhad for one of the developments of its state headquarters. For now, we might be seeing a further recovery on Sunway Construction towards the 1 ringgit 80, firstly towards the 182, and subsequently towards the 1 ringgit 93 cents level. Stop loss will be located below the 1 ringgit 51 cents level on Sunway Construction. With the breakout above the EMA 120 and also the 1 ringgit 60 cents level, we are already seeing the MACD indicator has already issued a buy signal, whereas the RSI has been maintaining its stance above the 50 level for most of the time in this year. Last two companies for today will be Eco International. Eco International has again seen the price pulling back from the recent peak of 1 ringgit 15 cents level. Since then, we are seeing price has violates below the 90 cents level. It did manage to stage a technical rebound, but the technical recovery was short-lived, as subsequently the Eco International continues to tank lower towards the recent low of around the 67 cents level, forming a hammer candle. With the hammer candle being formed, we did not see any follow-through selling pressure, and instead, Eco International has formed the mild recovery trend. And on yesterday, we are seeing a short-term consolidation or resistance breakout above the 79 cents level on Eco International, that we are expecting price to trend higher to see a further recovery back towards the 85 cents or even towards the 90 cents level. Stop loss will be located below the 74 cents. If you can take further risk, the final defense will be located towards the 71.5 cents level on Eco International. things appears to be quite positive on the Go International right now. As you can see, that price, the MACD indicator has been forming the higher high and also the higher low formation, whereas the RSI has been flirting mostly above the 50 level over the past 1.5 months trading period. Last company for the day will be Charimin. If the crude prices continues to trend higher, we did see Charimin has seen the similar movement as well. It forms the higher high and also the higher low formation throughout this period of time towards the 93 cents. After price formed the breakout pullback and the continuation pattern above the 35 cents level. Since then, price continues to be supported along the EMA 120 level. Recently, we are seeing again a healthy pullback on Charimin as price retraced towards near the EMA 120 level. So this could be one of the lower risk zone that we can accumulate on this company. That we're expecting that this could be the another wave of breakout pullback and the continuation pattern for price to retest the 93.5 cents. That will be the immediate target price for now, followed by the 1 ringgit psychological level. Your stop loss will be located below the current low, which is currently located at the 79.5 cents level on Charimin. With no bearish divergence signal on site in the MACD indicator as well as the RSI, we could expect price to at least retest the 93.5 cents level over the short-term period. If you have any questions, you can put in your chat box. I'll reply you shortly. One question here on Atumaju. Atumaju has been on a very strong uptrend in terms of orientation formation trend as the EMA orientation has been forming the EMA 9 above the EMA 20, 60 and 120 has been in line as price heads towards the 59.5 cents level. After touching around the 60 cents intraday high, we are seeing our price has gave up its previous session rally just towards the 27.5 cents level before staging a mild recovery trend. But on yesterday, we are seeing an inverted hammer candle was being formed on Atumaju right now. So this can imply that the most of the intraday or contra players are already out in position on Atumaju, that we're expecting price to see a further weakness back towards the 27.5 cents level over the near term. In order to see a recovery trend on Atumaju, we need to monitor for the breakout above the 38 cents level and a firm closing above that. We will need to see Atumaju to recover back towards the 43 cents or even towards the 47 cents level. So for now, let's monitor for this breakout above the 38 cents. But if price were to violate below the 32.5 cents level for today, then you have to cut loss or lock in profit immediately. So the immediate support will be located towards the yesterday's low of 32.5 cents, or else price might be trending lower back towards the 27.5 cents level. Yes, and one more thing, over the next 1.5 weeks trading period, I think for now for our traders or investors, it's advisable to watch out for the corporate earnings, because there will be a barrage of corporate earnings to be released in the coming days and also next week. So if should the corporate earnings comes below expectation or below its previous year's earnings, then it's better to lock in profit or cut loss immediately for the first thing that you have to do on the next trading session. If there's no further question for today, then we'll end morning briefing. Thank you.